What's going on, guys? This is Rodrigo, another episode of Asheville Real Estate News. Really excited to bring you guys this episode. It's a second episode we're going to do on the numbers, doing it with Zac Ruiz from Keller Williams, and he's been putting out this thing called the Ruiz Report. It's 5 months in running, and if you go back and you listen to our podcast, I think it was end of March, might have been early April, he and Jeff Stewart from Keller Williams, again, jumped on, and we talked about the Ruiz Report, which is his interpretation of the data or his compilation of the data. And so we talked a little bit about what's happening, why it might be happening, and questions you should be asking yourself on what this data means to yourself. So I hope you really enjoy it. And he mentioned this on the dovetail end of the podcast. I'm going to want to bring it up again. If you disagree, if you agree, please reach out, let us know in the comments. Email him, email us, whatever the case may be. We'd love to hear from you. So hope you guys enjoy it. Please share with your friends. Have a great one. See you all in the next one. Guys, so excited about this episode here with Mr. Zac Ruiz with the Ruiz Report, which I think he said we talked a little bit ahead of time. So this is the fifth one, right?
Yeah.
So is it fair to say that this is becoming a staple and it's something we can all look forward to?
Yeah, absolutely. Absolutely. We've been getting a lot of feedback. So people have been saying, hey, it'd be great if you did it this way instead. And so it's been iterating and getting better and better. So.
No, that's super exciting. So I know we talked a little bit ahead of time, but just kind of contextual for everybody. We are going to hit the numbers, guys, and then we're going to talk a little bit about, I don't know if it's fair to say, the theories around why the numbers are what they are, or how to maybe interact with the data, what questions we should ask ourselves on, interpreting this information. So I don't know, before we jump into it, Zac, do you mind just refreshing everybody's memory on who you are, what you do, how you got into it, et cetera?
Sure. So my name is Zac Ruiz, and I have been putting together what's called the Ruiz Report. And basically, I'm a local realtor in the area, but I have a passion and a background in kind of data science and finance and looking into the numbers. So when I got into the real estate industry around here, there are people putting out reports. Let's not say that no one does it. But I thought there was an opportunity to come in and do it a little bit different, right? So I put together a report that says it right on the front. It's 10 slides with everything you need to know about your local residential real estate market. Mm-hmm. And that is essentially true. Right. And part of the story that we're going to talk about today is the essentially little caveat there, because if you don't put it in context, right, if you don't understand and get it holistically, well, then, you can read the numbers from anywhere, but it's not as valuable. So hopefully today I'd like to talk about a lot of the context of what's happening lately, and not from the way I see it. I'm going to try and remain as impartial as humanly possible, unless Rodrigo does his job very well. I'm just going to say, here's the information, right? Yeah. And I don't know that the information is getting out right now.
And let's touch on that really quickly. I think that there is a lot of information right now, because I think when stuff like this happens in the world, people are naturally going to search for rhyme and reason. What's happening? Why is it happening? What does it mean? What do we do next? And in real estate, the nice thing about that is that there is so much data out there that it's natural to just go to the numbers and draw immediate conclusions to direct things forward, right? Oh, well, this happened in August, so this is what's going to happen in September or whatever, which obviously is not the full picture. So, well, enough of me rambling on here. Let's get into the numbers. We're going to do a screen share here. And whenever you're ready, unless you want to add anything else before we start.
The only thing I'll add is if you're not into this, stay tuned. Rodrigo and I talked about this a little bit earlier, so I've got a great slide that just speaks to exactly what he was talking about, and I'm pretty excited about it.
Cool. Awesome.
Just kind of make the point. So here we have it. And do we have it?
There you go. Loading. There it is.
Okay. So the Ruiz Report, July 2020, Volume 5. The last episode was Volume 1. Mm-hmm. See, it looks somewhat similar, but, obviously the data's been updated and everything. So the way this report...
Sorry, for context, today is Saturday, August 8th, 2020.
There you
go.
For
when we're talking. Sorry, go for it.
Absolutely. And so every report, if you go to the last page, which is slide 11, but don't worry about that. It's 10 slides. The last page will say when I pulled the data, right? And so this data was pulled August 3rd. And that's because realtors are required to put the data into the MLS, which is the source of this data, within 48 hours. So I do it at the night of the 3rd, which is basically everything. If someone was lagging a little bit, that's on them, but also with the volume of data, it shouldn't affect it either way. So the first slide is the executive summary slide, and I'm not showing it on purpose because I'm going to zoom by it. Right?
Okay.
We could come back to it at the end, but it just tells the story that you would get otherwise. But if you want to just get it real quick, you go here, executive summary, 3 main headings, right? You've got listings, home sales, inventory, and absorption rates. We're going to go through that case by case. So what I'd like to start here is how do you interpret this slide? And if you're watching and if you have a better idea, reach out, right? Because I've tried to make it as easy as I can, but I still get some feedback here. So if you look at the top right there, there's versus last month versus this month last year. And if you look at the bottom, there's an explanation as well. But the point is the number on the left is what happened under this heading, so new listings, for example, in the month of the report, so July. In July, there were 527 new listings. The top number is the change from last month, from June. The bottom number is the change from this time last year. So I'm going to do something really quick, and then we'll go back and go one by one. But what I want you to notice is active listings. Active listings at 934 for July is 36% less. 36% less active listings than there were of July of last year.
And I'm going to just jump in really quickly. So active listings is a little bit of a realtor jargon, I would argue. Basically, active listings is just houses that are for sale.
That's right. And we'll get to a next slide that gives that a bit of a nuance, right? Because a house that's under contract is active but unavailable, right?
Yeah.
So all of the listings, and we're going to get to that, is active and under contract. But the main point here, right? The main point is if you look at active listings, the bottom number, it's 36% less. All right. And now I'm going to go quickly from left to right on 2 slides. So look at the bottom number. That's that metric compared to last year. Even though there are less active, we somehow had more new listings, more under contract, more homes sold, less expireds, less withdrawals. They closed faster. They were on the market less time. Our absorption rate, we'll get to that, was higher. Sales price above last year. Average list sale above last year. And month inventory less, right? Across the board in every metric, right? And so the fun discussion will be why, or why do we think?
Yes.
And so that trend holds. So I run this report currently for 3 counties, Buncombe County, Henderson, and Haywood. And it holds for all 3 counties in the surrounding area, right? So as a matter of fact, instead of just reading the numbers, I think we can go into the graphs a little bit, right?
Cool. Yeah, and in this report, it's available, right?
Yeah, absolutely. So we'll put it in the show notes. I'll send it out to you.
Sweet.
I'll give you the 3 counties. And
yeah, thank you.
So this slide is useful for 2 reasons. One, there's the macro market, and then there's the micro market. It's what you care about. What is my home worth, or what are the homes I'm interested in worth? And so you get all of the rest of the slides have this exact same data, but this is narrowed down to what you might be interested in. Also, back to real estate jargon, on the right, there's two important terms here, and it's the absorption rate and the months of inventory. And so on the right, there's an explanation of what those numbers are, and then how to interpret them as well. So at the bottom, the easiest way is green is seller's market, red is buyer's market. And don't think that's good and bad. That's just, for the health of a market, you're talking about the homes moving. So it looks more on the seller's side.
And what's the tipping point between the sellers and the buyer's market?
Good question. So that changes, right? So for the absorption rate, if you look here on the right, anything above 20% is generally associated with the seller's market, right? So let's just go down from the top. 95%, that's above 20. 159%, that's above 20, right? So now coming down, months of inventory, and this one's open for debate, but I did a bunch of research, and these are the numbers I landed on, right? Some people will say 6 months or less, and 6 months and above, but I like this neutral, somewhat healthy, the idea of a healthy market, right? So if months of inventory, which means if no homes were added to the market and they continue to sell at that rate, how long would it take to deplete everything? Yeah. Right? Between 0 to 4 months means there's not a lot of inventory and they're selling relatively quickly, right? So that's a seller's market. 5 to 7, that's what I like to do is the balanced market, because let's not ignore that. And then there's the seller's market where there's just a glut of inventory and buyers have their pick, right? Yeah. So right now, for the whole county, we're at 3.17, right? So 3-ish months of inventory. But again, let's go down the prices. Less than a month, a little over a month. Like there's not a lot is the point, right? And that'll influence that next discussion that we have for fun. So let's get into let's put it into context a little bit, right? So every time you go through this report on the right, there will be 3 somewhat similar talking points just to keep it, most relevant. But let's just look at shapes. Everyone likes shapes. The shape on the far right is smaller than the shape on the far left, right? So at the bottom there, you've got July. You've got all the months in between. On the third from the left there is last July. So you'll see the one on the right has a green box. The one on the left has a red box.
Right.
And you've got the 2 preceding months to kind of give you an idea of seasonality, how it's coming in, right? So if you've been following the reports and if you want access to them, again, just reach out. But we're behind last year, okay? All those lines are less. And so the last point there, overall volume was up a little bit over 1% from last month, right? But down over 21% from last July. This is the 4th month in a row where we're down compared to the same period last year, right? So, and this is why I reached out, you want to read on to put that number in perspective, right?
Yeah.
There's less. The pie is smaller, fact, right? What's happening in the pie? Well, here are listings and closings. The red are the new listings, the bar, and the line is the homes sold. Now, something to keep in mind is that homes sold is a lagging metric. If it sells in July, it went under contract in June, May, more or less, right?
Yeah.
But on average, yes, and we'll get to that too. So let's just start with homes sold. Homes sold is the green line. You'll see on the right, July is 473 homes sold, and this is single-family homes, townhomes, and condos, right? Last July, 453. So even though there are less homes available, we're selling more of them.
Okay.
So now you've got new listings. So let's look at it. March was, you can't see last March on this one, but you can on previous version. March was quasi-normal, right? In March, we got the lockdown. We had real estate that wasn't an essential service. We had like unlimited uncertainty, essentially.
Yes. And that was the beginning of the Ruiz Report, right?
Yes, it was, right? Volume 1, which is why this has been an interesting journey. So April was less new listings. Now that makes sense. March was less new listings from the year before to an extent, and April was significantly less, right? Since then, look at all the people trying to get into the market, right? Last July, 516 people thought it was a good idea to list their home in Buncombe. This July, 527, more people. More people are getting in, right? And so let's not get too crazy with technical terms and economics and everything, but like 2 consistent quarters, right, of ups or downs signal a change, right? We've got now 2 consistent months, right? Maybe 3, depending on your metrics, right? That kind of show the potential for a rebound. It clearly nosedived, right? But there may be a rebound happening, and there has been positive movement. Can't say that, right? So let's go to the next metric. Home prices, and we're going to get to this. This is my fun slide a little bit later. So you've got 2 lines there. You've got your average price in Buncombe, and you've got your median. And so the average is if you take all the homes together, total up how much they sold for, divide it by how many that sold, and there's your average, right? Pretty simple. But it's not terribly useful sometimes, right? If I sold 100 homes, one of them for $1 trillion, the rest for $1, well, the average wouldn't make any sense. You'd never find it. Right? So that's where your median comes in. You line them all up from smallest to largest, cheapest to most expensive. You take your middle one. So notice there's fluctuations up and down. I will never tell you why, like just life, right? But if you look at the 15-month trend and the year trend, it's a positive trend, right? So we're 6% higher than last July. So if you did nothing and somehow you're able to sell the same home time for time, there's a chance on average you would have gotten 6% more on your return. Right? Investment, carrying costs, all this good stuff. We're just talking basics, right?
Gross numbers.
That's right. So the positive home value appreciation seems to be holding despite global uncertainty. That is literally in the face of a shutdown economy and a pandemic and all sorts of stuff like that, right? Worth keeping in mind. Days on market, and now this is kind of what we were talking about. Are these numbers because of a supply shortage? Certainly. That is a huge contributing factor. There's less available. So if you really know you want something, you better get it, right? So you realize that, okay, well, I might start my search. There's 20 homes, and you can look at, I'm going to really quickly. So if you go to in July, right, there's active listings and pending ratio, right? And the pending ratios of all of them on that market, how many are for sale? If you're looking under 200 grand, it's 70% of them are under contract, right? So that's how you would interpret this slide. But coming back to days on market, February and March, right? Lots of days on market. And this is a seasonal thing as well as like things started changing, right? People were like, hold on now, I don't know if now's a good time to buy. I'm in my due diligence, let's back out, or all sorts of things. My job is, I'm on furlough, right? So even though we bounced from last month, which was like a historic low, depending on how far back you look, we're still 13% faster than they sold last year. They don't last as long, right? And the thinking there is, like I was saying, if there's 20 on the market and I go look at all of them that I like, I'm like, wow, there's nothing. There's no other game in town. So when that new one comes on, if we like it, we now know we kind of have to move. Gotta move, right? And back to the list sale, that's something else that Buncombe enjoys tremendously, right? Basically, in the 98s, a lot of the times close to 99 and above, list price, right? So, and again, right, so there's a nuance there as well. And this is why you'd want to have a professional helping you out and everything, context, right? That's what it sells at the moment it's listed and goes under contract. That's not the original list price. Some people may have made a huge mistake and corrected by tens of thousands of dollars, depending on your price range. And then, we sold for 100% a list, So look into this.
Yeah. I always find that that's a very interesting stat to look at when you look at things as the original list price ratio, because it tells you, I think it's one of the most indicative for me personally to see how realistic are people being about.
Okay.
Right. It's your realistic metric from my perspective.
I was going to be like, you're not wrong. But then you hit the nail on the head. Right. So if you're a realtor, so I'm a realtor, I'm not telling you what to do. I'm advising you. Ultimately, you're in charge. If you think that your house is worth, the
$1 trillion house.
Okay. And that's why your list sale is good, because you tell them, with the market and then with our expertise and everything, once you get it right, it goes really well. So let's avoid that.
Yeah.
But so we'll have a real estate, an agent talk another day. Contract to close. All right. Now this is not in the realtors thing, but now think of the system we live in. Contract to close. So first off, I'm sorry. Days on market is I list the house and it goes under contract, which is sold, but it's not sold, right? Under contract. Those are the days it spends on the market. Once it's under contract, it's technically not on the market, coming back to what we were talking about earlier. Now you're in contract to close, right? That is a function of getting tradesmen over there, getting inspectors over there, and the mortgage people. Considering that rates are at historic lows, everyone that can and is able and willing to, and it makes financial sense, is trying to refinance, right? As you see, there's more volume of sales than last year. The fact that we're below last year is incredible, right? Our mortgage people and our market is really, really, really stepping up. Try and get someone to come to your house for a small repair. Good luck. Everyone's booked. And so then again, different price ranges, and then not as relevant for this talk today, but we'll quickly go over it, is contract to cash. The moment I put my house on the market to the moment I deposit that check, how long is that? And it's a simple formula. It's a function of the days on the market plus the contract to close, right? Because everything's faster, it's faster than it was last year, right? And that's not the normal thing to say. It's faster than it was last year despite everything going on, right? You can't go get dinner and sit down, right? Like it's at certain places. You can't.
It's still going faster.
And it's still going faster, right? So let's put that in context. So now, if you want to add or ask any questions about that, go for it. If not, I've got my fun slide.
Let's go to the fun slide.
All right, hold on. I got to escape. I got to hit buttons. Okay, so let's find it. Here we are. Can you see this screen?
Perfect.
Okay, so get ready. We're going to use inflammatory language. It's going to be fun. So
all right.
This is so you see at the top right there, it's from Canopy MLS. This is just straight up the data. Right? So this is 1 year of the median, remember, and we're going to choose to use that. It's lining them all up in the middle, the median home price. Well, the beginning of 2020, right, somewhere in between here and there, I'm not sure if you see my mouse, the coronavirus hit. Clearly, that's the end. We've had a good ride. Homes are going to tank, right? That's it. Well, it hasn't happened. I'm not saying why or otherwise, but just it hasn't happened.
It hasn't happened, yeah.
It hasn't happened.
Wow.
Let's go back a little bit, right? 2016, if Trump wins the election, unless you're radical far right, that's the end. That's the end, right? Well, that didn't happen either, right? Let's go back a little bit further. 2012, if Obama gets a second term, well, unless you're far left, that'll be the end of the economy, won't it? The exact opposite happened, right? And I'm not saying anything about political parties because let's go a little bit further. The max data you can get is 16 years. 2008. Now hold on, something did happen there.
Yeah.
Right? Banks were lying. They were packaging deals that didn't have the right credit rating to make them better than they were. People were self-reporting mortgages. There was something real and tangible behind why, right? And so the other things are pure speculation, speculation, right? Who's going to win? What's happening? All that stuff. This is something underlying. The data is no longer real. I can't make a sound investment because what I think is AAA rated is not. What I think is going to pay me back could be a bag of nothing, right? That is a big, big difference. And so I had a really interesting conversation with my brother-in-law the other day about investing in certain ways being pure speculation. So let's have a little bit of fun, right? So if you go back, one of the dawns of investing is this guy, Benjamin Graham, value investing. If you know about like Warren Buffett and all this stuff, and like that's analyzing a company and seeing undervalued asset and purchasing the price, right? So if you're at home and you're like, I play the market, it's all good, right? Well, if you can't tell me the current liabilities, the long-term liabilities, the assets on the books, the deals they have coming up, right? Where the management came from, what they like, if you don't know the company, what are you investing in, right? And if someone just tweets something like, I love Tesla and SpaceX, but Elon Musk doesn't make people's jobs easy, depending on what side you're on, right? That has nothing to do with the
viability of the company.
At all, right? Now, the home. So again, I'm not taking a side either way. The home's a real thing, right? The home's a real thing. If you bought at the peak of 2008, the worst decision ever, but you waited 10 years, right? That's like 50 grand appreciation. And that's just on the value. That's not the rental income you might have got while you're in, right? That's the equity, all the good stuff, right? That's the sound investment. You're investing in an underlying asset. You're doing something and you can reach out and touch it, right? And that is my opinion. There are a lot of people making a lot more money than I am investing in stocks. So don't think I'm saying don't do that, right? But it's be realistic with what you actually are doing, right? And so the news, right, and this isn't a diatribe about the news telling you that the world is falling apart and everything is not the same as what's happening to the asset you're investing in. It's not the same of what's happening to the market because I can show you with the numbers. I can't tell you what's going to happen. But what has been happening, right? Here's a graph of a very, very simple median price has been going up. We could keep zooming out and seeing a bunch of dips. Right. And it looks like it's been going up. Can't tell you that's going to happen forever, but I can tell you as far as sound investments are concerned, real estate hasn't done too bad depending on your investment horizon. Right? Yeah, no,
I think that's a good point. And the one thing that's important to notice there or to mention is you're talking about investments that are, a 10-year window is the example you gave. So this is not a buy today, sell tomorrow type of real estate investment, which although can be profitable, definitely has a different level of risk associated with it just because it's faster, right? And I think that's fair for any investment. Like the quicker of a payoff that you're expecting or wanting to have, that's going to have more variability. And so, well, actually, I don't know about anything else other than real estate, so I'll take that back. But in real estate, like you have more variables to account for. If you buy a house and you're trying to sell it in 6 months, the things that can go wrong are a lot higher in 6 months than say 10 years because you can recover from a oops over a 10-year period a lot easier than you can recover from an oops over a 4-month period.
Well, so let's make it a little bit more real. The first time we had, you said, what do you think? And I said, hey, put my money where my mouth is. I'm buying a duplex, right?
Yeah.
So I've done my best, but let's tilt this camera a little bit, right? Whoa, right? I'm living in a construction zone, right?
Yeah.
If you were saying, how's your deal going today? No, I'm learning a lot. Right? But how's my deal going to be when I have tenants and when they're renting and when some time has passed and when I paid this down? I like to think pretty good. Right? And so the only other thing I was going to mention is super, super basic finance concepts like we were talking about, right? Mm-hmm. Basically, when you're choosing to make an investment in a very basic way, what you're doing is saying, what can I get for a comparable use of my funds? What can I get for a comparable investment plus the risk premium associated with the unknowns, right? So like you're saying, if I'm going to flip a house, you need a different skill set entirely, right? You need to know pricing. You need to have the right contractors, permits. There's so many things that can go wrong. Price it in. Now make your decision, right? There are different types of risks. There's credit risk, inflationary risk. There's like school book risks, right? One of them is political risk. I'm not saying that the news and all that isn't real, right? but it's very real, right? But like there are other things at play, and people are putting a lot of emphasis on just what's coming over the airways or just the headline, and not what is it about, you know? And so that's an interesting way to kind of go at it.
No, I think you're totally on about that. I think there's a lot of truth to that as far as right now in general, right? Like the amount of people who would choose or prefer to flip a house is much higher probably than the people who are going to choose to invest heavily in rentals, right? And it's not a right or wrong approach, but there is definitely something, there's a different way to do it. And it's easier and more enjoyable to feel like it was worth the risk when you get paid back quicker, right?
So, you know, and I'm glad you brought that back up because I lost my train of thought a little bit. So, okay, you're flipping a home, cool. Mm-hmm. But I'm having my first kid, right? Yeah. Or I just got my first job. I've got to relocate to this area, right? I'm going to have this job for a bit. My kid's going to be a toddler for some time. Then we're going to need more space. Traditionally, the way into the middle class is buying your home and selling it later, right? So if you're buying your starter home because either you can only afford so much space, like real life, you're assuming also you are making an investment. Don't think you're not. You are making an investment. You are, congrats, an investor, whether you think so or not, because your asset will or won't appreciate. But you got something to say about that?
I would push back on that. I just don't think that primary homes should not be considered an investment. I would stand on that.
I hope
for a long time.
Yeah. So I hope you have a diversified portfolio. I hope you have a job. I hope you have other things going on, right? But if you are going to get in it and sell it, something will happen. You'll win or lose. You'll make or lose money, right?
True. Just costs you money every month. It's definitely not paying you anything.
Not in the moment, right? But like, how does an amortization table work, right? You've got your principal and your interest. So it costs you the interest every month, but you're investing that equity, that principal.
Yes. I mean, we could go down this rabbit hole for a long time. I'll just say this is like, look, if you're listening to this and you're like, Rodrigo is absolutely crazy, I would just say is, and this is my opinion, this is like the decisions I make. Like I'm currently a renter. If you're thinking about buying a house, I would always encourage people to rent a house and then buy a rental and then keep saving up and then buy another rental. And allow that momentum from your rentals that you're building up pave the way for whatever you're personally wanting to do with the funds or your life. I think that, and maybe I'm just a little jaded, like, you know, I buy houses, right? That's what we do. And how often the conversations, whether we end up buying the house or not, revolve around somebody feeling stuck in a house it's not uncommon. I would argue it's very common when people push themselves into a buying decision because they think that's the only way out. And I just want to make sure, like, say, hey, like, there are other options. Like, yes, buying real estate obviously is a really good thing. I just think that, you know, take that same effort, energy, be a little bit more patient, buy a rental, buy 5, whatever that volume is. And then when you go have the confidence to buy your primary home, you're probably not going to sweat that mortgage as much.
No, I'm 100% with you there, right? I'd recommend, there are a bunch of them, but the one I refer people to a lot is NerdWallet has a rent versus own calculator.
Okay, cool.
Today, this is a business decision. If your garbage disposal goes out in your rental, you pick up the phone. If your garbage disposal goes out of your house, you pay for it, right? And that extrapolates to everything, right? That's with the skill of making your money on the buy. Mm-hmm. You know, I'm learning right now. I just zoomed out. If I turned the camera that way, learning a lot, right? So, yeah, you know, so at the end of the day, this conversation, make an informed decision. Yeah. Are you buying because you're nesting? Or are you buying because it makes sense, right? And so if you're nesting, look into it a little bit. Whip out that amortization table. What's it mean? I think you might be shocked to see where your first couple of payments are going.
Yeah, absolutely.
We'll get equity in a year. It's like,
Yeah, if the market changes by 10% positively speaking. But well, I don't want to like spend too much on that because we've talked about home buying versus renting a lot on this, just because, again, I'm always like, hey, well, like, let's think about this for a second.
So actually kind of to dovetail, right? Like, and so I called Rodrigo before the show and I was like, I can read the numbers, but you can get my report and read them yourself. Yeah. Right. I want a better message to come out of this, right? Sure, it's the giving it holistically and giving it some context and everything, but it's also what's happening right now, right? And to get on my little soapbox for a second, people.
Good. I was going to try to put you on it, so this is perfect. Go for it.
You know how we're going to come to a good decision here? I'm going to make my decision using your information. I could disagree completely, right? But now I'm more informed. I'm either more steadfast in my decision, or I'm a little more cautious in taking your point of view into concern, right? And I think we need more of that right now. And so to use real estate as that example, I'm not on here to tell you that the market's going up, buy your house. I'm not on here to tell you the market's selling, sell your house, or tanking, sell your house. Right. I'm saying use your information, talk to people, get opposing views. Get someone to just disagree flat out on everything you have to say so you can test what you believe in. So, that's healthy. That's good for us, the country, your family, your relationship, all of it, That's
I think you're right. And that's the whole idea of being able to hold opposing views and not necessarily run one way towards or one way away from one, just because it doesn't match up with where you're coming from originally. So a couple of questions around this market report. And I'm just curious to know, we're not going to talk about the future. We're going to talk about August 8th and back, right? So we'll look backwards a little bit. So you're looking at this and you would say it's a good market? It's obviously a seller's market, but is that a good thing? Like, are you saying I've got buyer confidence right now?
Who am I talking to, right? So because it's nuanced, right? Yeah. You're going to sell your home. You're going to do well from when you bought it. I can tell you that pretty confidently, right? I've listed some homes that have gone into contract the first day, right? Where are you going next, right? What's your employment situation look like? The credit hit, there's so much more to it, right? And so there's more to it. One of the things.
Oh, go for it, yeah.
Oh, then I will say that what I've been hearing from the realtors, and I'm this person. I just moved from Santa Monica. Before that, I've lived in New York, like Manhattan, DC, Arlington, right outside DC. Miami Beach, big cities, nothing but that, right? And I'm not here by accident. I didn't want to live in the big cities anymore. And I think especially with what's going on, people are moving out, the urban flight, whatever you want to call it. Yeah. They're looking for quasi big cities. Asheville's not a big city, right, by numbers, but you got your night scene,
it's got everything.
Well, it had your restaurants, it had your right? You could drink after 11, but none of that. So, right? So Asheville's a good market. So back to what are the underlying factors of my financial decision? Why am I buying? Do I see this place still having those same things to offer in 5, 10, et cetera years, right?
Yeah. And that's one thing I've always talked about. It's the mountains aren't going anywhere, and they're not going to just magically not be beautiful anymore, right? Those are some pretty good constants you can bank on. I'm curious to know, and I'm imagining you don't have the stat. I would love to know, and maybe this is something you can send or share afterwards, is what interest rates were in accordance to the median sales price and absorption rate, compared to last year.
Yeah, because, so I can absolutely find that out.
Yeah, and the reason I ask is because I think everybody would agree things are moving at record speeds. And maybe I'm a little bit more negative than somebody else. I just am having a hard time believing it's because there's a ton of buyer confidence or consumer confidence, and it's more of just an issue. There's just not enough, right? And I guess I'd love to hear you speak on that a little bit, if you've thought about it, or if there's any data that maybe you didn't include on the report that you looked at that would sway me one way or the other.
Right. Well, so I don't have the data, so let's leave that part alone. You can get that data, right? There's historical records, so what interest rates were. But what I can tell you is that there are people out there, not a small number of them, think of pain or fear avoidance. If you do think doomsday is coming, if you do think this is the end of times or whatever it might be, then you probably want your homestead, because how many renters have just been given the notice, that's it, we're selling the house, or hey, my son's moving in. Yeah. You have significantly less power, right? And back to your financial decision, that's part of it, right? That's part of your decision. And so I do think people are looking for something to call their own in these times. And that is certainly factoring into their decision to buy. So Jeff Stewart, who we were on with last time, has a bunch of greats. There's a lot of Jeffisms that I'm just totally stealing. So I'll give it right? And there's the quantitative, gives you the information, but the emotional helps you act and make a decision, right? And we are in an emotional environment. Right?
Yeah, I think So my first real estate coach I ever he had this like one thing that's always stuck with me. He said, facts tell, but emotions sell. Yep. And I guess that's kind of where I'm like a little bit more cautious, is because it just feels like so much is being like emotionally driven right now. So did you have anything else to add? I had another question I was curious about too.
What's the other question?
So what happens if we go from like 1.5, well, I forgot what the absorption rate was. Like say 1.5 months, right? Give or take 2 months. Let's call it 2.
Yeah.
2.
So inventory right now, we are at 3.
So 3. So what happens if we go from 3 to 6? We have 100% change.
Right.
We're still in like a pretty good market though, right? Like, I've always grown up hearing 6 months is like a healthy market, but we're going to have 100% change in that. What do you think would happen? Okay, we're not going to speculate on the future.
Go for it.
How does that change the way you interact with the questions you're asking yourself, or with the data that you're looking at? I know you're a numbers guy, so if you see 100% change, but you're still arguably still positive numbers, do you react differently or interact with that difference in a different way? Or I know that was really convoluted. I'm sorry.
You're great. And so maybe, I don't know how, so I have another fun conversation all the time, right? And that is that economic theory is based on the rational investor. I've never personally met that guy, right? Yeah. I'm not a rational investor either, right? If you think of monetary policy or even your personal checkbook, what you're trying to do is bring yourself to equilibrium. That's what all these forces are about, in theory, right? So if we get to a healthy market, right, which is what that would be, that month's supply, depending on your metrics, but let's just call it right down the middle, right? Then it is different, but it's the way it should be. It's not a bad thing at all. It's a good thing. It's an equilibrium thing. That sense of urgency, like, oh, you like the house, put in the offer, may or may not be there. Now it's a lot more about that house instead of there are no houses, like,
right,
get it. You know what I mean? Or don't get a house. Like so those discussions would change. Or if you're telling someone to sell their house, be like, hey, there are only 5 other houses like yours. The odds someone wants it, really high right now. That wouldn't be the conversation either, right? So absolutely it would change, but it would change more to healthy, realistic expectations, if that makes sense. Because these are not normal, So let's not use healthy or unhealthy, right? But certainly they are on the fringes. If you've got your Gaussian bell curve, we're on the tail ends over here, right? So
that helps. I think it's just I'm very wondering what would happen when you still are, and I think we talked about the first time, right? It's like there's changes that happen, and it tells a story that might not necessarily be accurate, but just because we've been so far on one side of this pendulum, so it's like it moves back to the middle and it's like, whoa.
Yeah, you're absolutely right. And so we talked about this. I'm glad you brought that up, right? So living, when you look at quarterly reports for companies as well, and everything like that, right? You can't run a company or your life or an investment by the next quarter's earning reports.
Right.
That's not how it works, right? If you invest in a home my style instead of flip style, right? You're not going to break even for some time, and you're investing for that next time.
Yeah.
Right? So I think that comes back to play, what I'd call rationality a lot of the times. You know what I mean? Like right now, one of the issues with the Ruiz Report, as valuable as I might think that it is, the houses right now kind of sell themselves. The buyers kind of sell themselves, right? Because it's necessity at this point, right? And I think some people are making incredibly savvy decisions, and other people, like you're saying, talk themselves into buying something that they may get stuck in, right? So I think it brings a little bit more rationality and level-headedness, because that sense of urgency wouldn't be as strong.
So where do we go from here as a numbers guy? Are you in a wait and hold see? Or let me rephrase that. What questions are, listeners, people watch this, listen to this, they're like, man, that's a lot of information. What questions would you be asking yourself to interact with this data?
So I got my start in finance. So I was in Iraq, right? And I was like, I need to prepare myself for the world. So this is my second deployment as I'm ready to get out. So I got this book called One Up on Wall Street, right? It's by Peter Lynch, the Magellan Fund manager. And he's like, guys, it couldn't be easier. Invest in what you know. That's it, right? So I was like, got this, right? So I went all in, all my deployment money, all the combat pay and everything, stocks, right? A Visa IPO'd, I was like, I use credit cards, easy, right? And so invested in everything, right? The year was 2008.
Oh, man.
And so at the end of my deployment, I was getting out of the Marines and just living life, not really paying attention until, March, when woo, where's all my money? Just totally gone, right? So
wow.
Yeah, so that was fun. That was an incredible learning experience. It's what helped me get a degree in finance and math, and what brought me to Wall Street and all that good stuff, right? So where am I? I am in the other part of the book. Invest in what you know by analyzing the value and holding it for a long time, right? Because if you're trying to time the market, that's a different skill. I'm not saying don't do it. I'm not saying it can't be done. I am saying it's a different skill, and it involves speculation. Does, right? If you're trying to say, I'm going to buy an asset that I think is undervalued even in this market because it needs a roof and I've got a connection or all these different things, and I'm going to hold it for some years, and right off the bat, the market rents are higher than my mortgage back to investing. And even if things tank, I got my home on the VA home loan, right? So I have to live in part of it. So my payment's less. So even if the market tanks a bit, to cover my mortgage, I know with 2 units, I'll be okay with make informed decisions and hold. That's where I'm at personally for this. I'm very speculative in other areas. I've started startups. I've gone all in and gone all out. But
I think that's the balance, right? And on the long term, short term, I love the long term. That's where a lot of my investing energy goes. And then it's the difference of active income, and that's where the flipping comes into it, right? And that's always our balance. It's flip to buy long term as much as possible. And when you buy, you just try to make sure whenever you do the flips, you try to make sure that you're doing it as best as you possibly can.
Absolutely.
But it happens, right? Not everyone's a win.
No, and look, this is America, right? Risk reward.
Yeah.
Want a bigger reward, you're most likely going to have to take a bigger risk.
Yeah.
And back to your, you shouldn't view home buying as an investment. Like I said, all right, back to your active and passive. I hope you have a job. I hope you have another source of income, right? You're going to have to take some hits.
Mm-hmm. For sure.
Yeah.
Yeah. Well, any closing thoughts as we kind of just talk about this and we've looked at great data? I guess, what do you want to wrap it up with?
I would just say, if you're interested in reaching out and talk about it, go for it. But if you disagree with everything, if you have a different view, if you pull the numbers differently, reach out even more.
Yeah.
Let's push and get better and wiser as investors and everything, right? I think those are the dialogues I want to see. And if we end up yelling, great, but let's shake hands and be friends afterwards, right? So we need more of that.
Yeah, couldn't agree more with that as well. Zac, thanks so much for jumping on the call today. Always great talking to you, and thanks for putting those numbers together. Because I agree, I don't know where else to get that data. I can pull information myself. I'm not a numbers guy. I can't collect it and process it the same way at all. Not even close. So thanks for doing the work.
It's tough.
Yeah. Cool. How do people get in contact with you? What's the best way for people to get the report, call you, email you, talk to you, whatever you feel is appropriate for your contact? Yeah.
So coming up here shortly, you'll be able to go to ruizreport.com. I would like to just inform as many people as possible. The more informed people there are, the better it is, right? So I don't know when this show is going to go live, but if it's been some time, go there. And if not, email me at zac.ruiz@kw.com. Be like, hey, what happened, right?
Yeah. So when's it going live? The RuizReport.com.
We'll say within the week, right? We'll say within the week.
This is definitely going to be at least a week out. So,
but I'm going to provide you with the reports, and everyone can come right here to your website to get the July report.
Sweet.
Yeah. So.
And well, that's super exciting.
Yeah. Thank you.
And so, give your email again one more time, just to make sure people have that.
So if you get the report, it'll be on the last page there, but it's Zac, which is Z-A-C because I spell it different than everyone else. It's Z-A-C-O-R-Y, which is right as far as I'm concerned, but that's neither here nor there. So it's zac.ruiz, R-U-I-Z, @kw.com.
Cool. Awesome, Zac. Appreciate it, man. Hope you have a great rest of your weekend, and talk to you on the next one.
Awesome. Thanks for having me.